Amy, what do you make of the price action? What did you make of the price action yesterday? Is this a dip that should be bought?
Look, if you look to the derivatives market, guys, particularly in tech and Qs, the answer remains no. As regards the price action yesterday, there was some sort of technical options action related to people closing puts. When that happens, dealers can cover their side of the delta, so you do get, I guess, a near-term bottom there. But when you look to longer tenors, when you look 2 months out, 6 months out, 12 months out, it's very clear the positioning and the sentiment remains bearish in options land.
So where can you actually buy a put that's not insanely expensive?
Yeah, I think that's a great question, Alex. But to give you some, 10,000 foot context, from last year to this year on year in the Qs, we've actually had a 10 volatility point drop. And when you look to 2020 through 2021 to now, it's been the quickest volatility normalization in history. When you look, this is compared to the global financial crisis, compared to 1987. We had a 25 volatility point drop in realized vol coming into this year. So look, are things relatively expensive? Sure, but on a historical basis, we dropped a lot, and I think that's why you saw people putting on those hedges because, frankly, everything was kind of for sale from an options perspective.
In terms of what is driving this, is this about repricing the Fed? Is this about valuations? Just give me your sense of what is happening here.
Yeah, I think those things are both true. I think the other thing is, at least in options land, we've removed a really large pillar of bullishness, and that's the retail pillar. We don't know if it may come back, but one thing that we had for 2020 and 2021 was just extreme exuberance. We had call buying from the retail community, largely focused in tech, and that drove a lot of upside momentum. And we've largely seen that go away, Guy. And so sometimes, I think it's obviously valuations, obviously the Fed, but it's also the absence of this upside buyer that had remained with us for 2 years.
Yeah, Amy, to that point, JP Morgan was saying that the retail crowd snapped up about $1 billion worth of stocks on Monday, but clearly, as we can see today, that's a huge amount. It wasn't enough to continue to propel the market. So where are we on correlations? Because if we blame the tech sell-off for the rise in yields, where does it correlate?
Yeah, so, look, I think we've had relatively high and rising correlations heading into this year. I think they start to break down a little because we typically do see that as we go into earnings season. Things decorrelate because we get idiosyncratic information out by companies. And then, as we head towards kind of like that January 26th date where the FOMC meeting is, I think correlations start to rise again, in particular in tech when, you get that kind of 40% slug of earnings plus obviously whatever Powell says on that 26th date.
Amy, is this just tech or is this the wider market? There's a lot of focus around the Qs. There's a lot of focus around those specific ETFs that are tech heavy. What is the difference between those and the rest of the market right now?
Yeah, but look, it comes down to how the meat is made. And I think it's funny sometimes that we use Qs as a proxy for tech because when you actually look at the weightings, right, you got a Tesla in there, you got Pepsi in there, you got Netflix in there, is it actually tech? I think it boils down to factors, growth versus value. But when we look and slice the market overall over the next 2 months, it's very clear that the concern is not just tech. It's in discretionary, it's in retail, using XRT as a proxy or XLY. It just happens to be the most high in the Qs and XLK, but by no means is there no bearish sentiment in the other sectors as well.
Okay, fair enough. Look at the NASDAQ now, 0.2%. We talk about some volatility. Amy, before we let you go, the Russell 1000 value has been outperforming. The banks outperforming, energy outperforming today. What does the option market look for those guys?
So it's interesting because on a relative basis, the options are showing less concern. But on a more absolute basis, all the option prices are climbing from kind of the lows we saw at the beginning of the year. And the one thing I've always said to clients is, look, things can outperform and still be down. So I think that's, kind of an important thing to keep in mind as we go through the months ahead.